Hello everyone, welcome to our channel Stocks Factor. Hope you are doing well. Friends, in this weekly video, we are going to look at the levels for the main indexes, that is Nifty and Bank Nifty for the next week, and then we will quickly look at some stocks which provides us the good opportunity for the next week. Before we start with the analysis, one very important point to mention, as we mentioned in the earlier videos also, that this video is for learning purposes so that you can do your own analysis the same way for any stock or any index you are analyzing using our dashboard. So friends, let's get started. So we'll quickly go to the index analysis page in order to analyze the Nifty and Bank Nifty levels for the next week. So here we are on the index analysis page and you can see Nifty is by default selected and the default time frame is 3 months. So let's start with the important levels for Nifty. We can see that the maximum resistance is at 18,000 as per the option chain data where the maximum call writing is, and maximum support or the put writing comes at 17,000, right? Now let's look at the futures cumulative open interest data. We'll look at the weekly data. Slight short covering came at the last week. So we can see slight short covering at last week. And on the daily chart, we can see that the price has increased from the past 3 days and then slightly reduced on the last trading day with very less short positions created. We'll analyze that in detail. Now let's look at the PCR level. You can see at PCR level rising overall with the price. So now it means that some support is coming at the immediate levels around 16,800. We have seen that in the previous 2 days that some buying is coming at those levels around 16,800 to 850 levels. So that's why put writing has increased in the last 2-3 days after the fall, and we can see PCR level increasing, and now the PCR level is at 1. Same we can see in the weekly trend also, but in the monthly trend we see that the more calls are being written as compared to the puts. But one very important point to note that this last week also happens to be the monthly expiry. So any PCR change in the next 4 days, we'll see the same picture in the weekly and the monthly data points for the next 4 days. And starting after that in the January, the picture will again change. The monthly expiry will be for the whole month of January and the weekly expiry will be for the first week of January, right? Now let's look at the option chain in detail quickly. So we see the support coming at 17,000 levels and the price also closed above 17,000 on the last trading day. And we can also see a slight straddle at 17,000. So if we quickly look at the weekly picture also, so let's quickly look at 30 December data, that is the current weekly expiry and also happens to be the monthly expiry. So it again gives the same picture as the total cumulative open interest of the option chain. We can see 17,000 one support level and then the next support, major support coming at 16,500. Now if we identify a most probable range for the Nifty for the next week, that is the next 4 days. So what we can do, we see a straddle at 17,000. So let's quickly look at the option premiums for the next week, that is the weekly option premiums, right? So 17,000, we will look at the call option premium, that is 134 rupees, and the put option premium, that is 128 rupees. So almost 270 points premium. So if we talk about the probable range for the Nifty as per the current data, so it will be around 17,270 to 17,300 on the above side, and on the below side we can see 16,730 to 16,700. So this will be the high level 600 point range for the Nifty for the next week. Now let's quickly look at the Bank Nifty levels also. So we will identify the range for Bank Nifty also for the next week. So let's again start with the important levels for the Bank Nifty. We can see maximum resistance is at 36,000 and maximum support is at 34,000, and the close price is somewhere between these two levels. Now if we quickly talk about the futures cumulative open interest, we can see short positions on the last to last week, and we can also see long unwinding happening in the last week. So this is a slightly negative bias on the Bank Nifty side as compared to Nifty, and same can be seen in the daily futures cumulative open interest also, short positions and then long unwinding. Now if we look at the PCR level, so PCR level slightly increased with the price on the last 2-3 days. So it means we have also seen some support level coming at these levels. Anywhere price goes around 34,500, we are seeing some buying interest. That's why we have seen more put writing at those levels, which has taken the put call ratio higher. Similar trend can be also seen in the weekly trend and the monthly trend also. Now let's quickly look at the detailed option chain. This will help us to analyze the high level range for the Bank Nifty for the next week. We can see a almost perfect straddle at 35,000. So if we were to define a range for Bank Nifty, we can see immediate support coming at 34,500 and immediate resistance at 35,500. Now if we look at the option premium to define the range for the next week, so let's quickly look at the option premium at 35,000 levels. 307 is the call option price and 429. So 429 plus 307. So it is almost 730 point range. So we can roughly say at 700 point range. So the probable range is 35,700 on the upside and 34,300 on the downside. Any dip towards 34,500 to 34,300, that 200 point range, we can do a buying keeping a stop loss below 34,300. Similarly, any jump above 35,500 to 35,700 can be utilized to exit the current positions, or if you want to buy a put keeping a stop loss above 37,750, right? So in this way, we have defined the probable range for Bank Nifty. Now friends, coming to the daily summary page, as we talked about earlier, that we will also look at some stocks which provides us good opportunities for the next week. So we'll go to the bottom of this page and we will look at these 5 tables which provide us the daily summary view of what has happened on the cash segment and on the futures cumulative open interest. So we will see where the significant positions have been developed and where there has been a significant price change. So starting on the long build up, we can quickly see first stock, that is FSL, significant cumulative open interest of almost 30% and price also increased around 5%. So this is a significant change. And if we select this stock, we can see important levels for this stock. You can see here that price change since last expiry has been 7%. Price closed above VWAP, a positive sign for the last trading day. We can see good amount of put writing. PCR changed 46%. So on the last trading day, there was an increase of 46% of the PCR as compared to the previous day. This is a very significant change, right? So now friends, let's go to the this particular stock, and we also go to the stocks analysis page and analyze this stock in detail. So now friends, instead of going on the top and clicking on the stocks analysis page to go to that page, we have added a very handy feature for you where you can directly right click this stock from these 5 tables and select this feature, drill through stocks. So what it will do, let's quickly see. You will land up to the stocks analysis page where this stock will be by default selected, and you can see the data also coming for this stock. So this is a very handy feature which we have added recently, and you can utilize that feature. And if you want to go back, if you will click this button, you will again go back to the daily summary page. Now let's analyze this particular stock, the important levels. Resistance at 190, support at 170, and price closed at 183.45. Let's look at the futures cumulative open interest, bullish signal. We can see price increasing with the open interest, and we can see the same trend in the daily chart also. PCR level rising, again a bullish sign that the price increasing with the PCR level. Now friends, let's quickly look at the option chain. So here clearly we can see that the future player is very strong. We can see on the last 2 trading days, we have seen significant increase in future cumulative open interest and the price also. So if we look at the 23rd December data, so this row would have also come in the daily summary page on this particular day. If you would have seen this stock on the on 23rd of December data on the evening, so you would have seen this data on the daily summary page also. And if you wanted to take the positions the next trading day, you would have taken the positions. How we have discussed in the momentum trading video. We will give the link of that particular video on how to identify stocks for the momentum trading. Please watch that video, because this again is that scenario which we have discussed in that video and which will really help you to identify stocks for momentum trading, right? Now friends, we can see here that on 23rd of December, there was a significant price change. Almost the open price and low price was same, and the price went up to 176. So significant increase in price, and the close price was very much close to the high price. So this was a perfect green candle, right? And we can see huge cumulative open interest also. That's why in such scenarios we have discussed what you can do on the next trading day. Wait for the dip towards the average price. So we can see that on 24th of December, the low price was 172. So any price which is near the previous day VWAP price, so 170.84, wait for a dip near this price, keeping a stop loss below this price, below the average price. So we see that the price came up to 172.35. So you would have utilized this range of 170 to 173 to buy the stock, and then keeping a stop loss below the VWAP of the previous day. And then you can see the price also increased up to 185. Now let's look at the possible movement for this stock on the next trading day, that is the next week. We can see also the relative strength is very strong. It is outperforming Nifty as of now. Now looking at the option chain, we can see significant call unwinding at 180 and put writing. So this is again a positive sign that 180 option price that is getting weaker, but still we can see huge call writing at 180. So if this unwinding continues on the next trading day, if the price sustains above 180 and you see call unwinding, then there are high likely chances that it will hit the maximum resistance strike price, that is 190, and some selling or the resistance is likely to come above 190. That is, if it goes above 190, so 190 to 195, this is a range where resistance or the selling can come for this stock, right? Because these call writers will not allow the stock very easily to cross 190. So if you have any existing position, you can take that range 190 to 195 to exit this particular stock. And if the stock price opens on the next trading day very much near to the close price, previous day close price, that is around 183, please wait for a dip between 175 to 180. Wait for the dip between that price, take the position between that price, keeping a stop loss below 175. This will increase your probability of success. The risk reward ratio will be good, and you can wait for the price to bounce near 185 levels and then you can exit. So this will be a good swing you can capture of 7 to 8 points, right? So this can be one strategy which you can take. So friends, in this way we have to analyze and build a range for a stock, where to buy and where to sell, and where not to buy and where not to sell. So this is very important that you have to define that when not to trade. Now let's go back to the daily summary page by clicking at the back button, and we will also see one more stock which is good for the trading purposes from the short build-up, right? Now we will look at the significant change. We can see Biocon, significant change in price and significant change in open interest. So we'll quickly right click this stock and we will go to the drill through feature, and again we will see the stocks analysis page. Now let's again look at the important levels for this stock. Resistance coming at 380, close price at 354, right? So we can see close price is very much near to the support price. Now we can see the futures cumulative open interest. Not very significant positions were created on the last week, but before that we can see significant short positions were created. And on the daily chart, we can also see that the short positions were created on the last trading day. And if we see the monthly data also, from the previous expiry, short positions are being carry forwarded to this expiry. As we can see here, short positions were created on the November expiry and those have been carry forwarded. Now we can see the PCR trend also slightly reducing with the price. Let's look at the option chain. Significant call writing and there has been no put writing on the last trading day. This is again a bearish sign that significant call writing has happened at the near strike prices above the close price, and you can see significant put unwinding but no significant put writing. So resistance coming at this level. So close price is around 360, and you can see the 360 there is a significant call writing, and above that also, and the maximum resistance is at 380. So now if we quickly develop a range for this stock, so we'll see on the last trading day significant short positions were created and the price fell from 366 price. So any rise above 360, that is around 363, you can take a fresh short position, or if you want to buy a put of 360, if you are an option buyer, keeping a stop loss above 366, because 366 is the price from where the previous day fall started, and above that this player will start incurring losses. So if we are to follow this particular player, this is a strong player because there is a significant change in price and open interest. So we can wait for a bounce in this particular stock. We can build a fresh position on the bearish side, keeping a stop loss above 366, right? Similarly, if the price opens on the next trading day and starts falling, please wait for a bounce in that particular stock near the high price of that particular day and then take the position. If the stock is already falling with the opening of the price, please don't make any fresh positions on the short side, right? Wait for the stock to bounce. And now if we look at the option premium at 360, so we can see significant call writing between 360 to 370 levels. So there is likely that resistance will come at this level. If we quickly look at the premium of 360, we can see almost 4 rupees premium. So as we talked about, 363 to 364 is the range to build a fresh position, not before that. So in this way, friends, you can analyze a particular stock holistically and build a picture so that whenever you trade, the risk reward ratio is high and the chances of success are high. That is, the probability is high. Now friends, we'll again look at very few stocks. So we will utilize the stocks hotspots page. This is very important, and we will talk about one very good strategy on how you can look for certain stocks where you can make positions keeping a very strict stop loss. So this is again for the swing traders or the momentum traders. So what we will do, we will use this table. So as you can see, we have talked in previous videos also, stocks which are just above support, right? So it means the price has corrected and it has come to the near the support as per the option chain where the maximum put writing is there. But we need to also see that what is the level of put writing at the support. So we'll look at two stocks here. First, we'll talk about ACC. So you can see that the PCR support ratio, this is sorted on the support PCR at that particular strike price. This is not the total PCR. This is the total PCR. This is the PCR level at the particular strike price of support, that is at 1800. So higher the support PCR, it means the stronger the support is. Now friends, what is the criteria for selecting the stock for such trades where we can take a very high probability trade keeping a strict stop loss? We have to see that the price is very near to the support, which is again this table shows, but we have to see two other data points. One, the support PCR should be significantly greater than 1. That's why we have sorted this table by default on the support PCR. This tells if it is significantly greater than 1, it means that more put writing is there as compared to call writing, and it will very likely act as a very strong support. And we should also see significant put writing on the last trading day. It should be on positive side. So that's why this combination is not good, because there was slightly put unwinding at the support, but there was fresh put writing for ACC at 2100 levels. So if we right click this particular stock and we utilize the drill through feature to see the important levels for this stock and also the detailed option chain. So we are onto this page, and let's quickly look at the last trading day option chain. We can see a put writing at 2100 levels. So if on the next trading day, let's look at the premium at 2100 level. So this is the faster way to do an analysis for such stocks. So let's look at the 2100 put. So 2100 put option price is 16 rupees. So if on the next trading day, if you get any dip below 2100, that is the price near to 2090, keeping a stop loss below 2080, what you can do, you can buy a call and keep a strict stop loss below 2080, that is 10 points below that, and you can take a position because there are chances that the stock can bounce from that level, because 16 is the option premium and the put writers will not allow very easily for the price to go below that level. So utilizing that opportunity, the risk reward ratio is good, buying just below the support on the intraday basis and keeping a strict stop loss, because chances are high for the stock to bounce. So we have to keep the risk management also using this strategy. Now let's also go back and also look at one more stock. So we'll quickly look at this particular stock also, Del Bharat. Again, we can see significant put writing happening at 1800 levels. So if we right click this stock and quickly look at Del Bharat data for the last trading day, and let's quickly look at the option chain, we can see significant put writing happening at 1800, which we saw there also, and we can see a good support coming at 1800 levels. If we look at the last trading day levels, so the low price for this particular stock was 1812, right? 1812 is the price. So if we quickly look at the option premium of the put, so you can see the put option premium is around 19 rupees, right? So 19 rupees is the option premium and the weighted average price is 42. So this particular range we can utilize for any intraday dip. So what we'll do, again, we have to keep a very strict stop loss, right? Since the bias on this particular stock is on the negative side because the price fell from the high price to the 1800 levels. So we'll keep a very strict stop loss. The chances of this stock to bounce from this level are high, but we have to keep the risk management. So we will utilize the intraday dip around 1770 levels. So 1770 levels, we will not take the trade before that. So any price coming near 1770 levels, we can buy a call and we will keep a strict stop loss below 1760. In this way, we have to take the trade, keeping a strict stop loss, because if the stock bounces from that level, it will go above 1800 levels and it will give you good profit on the next trading day. In this way, you can utilize the screeners or the filters which we have provided on the stocks hotspot page to select the stocks and take the trade accordingly. So very last, let's again go back to the stocks hotspots page and let's quickly talk about this table also. So this tables on the reverse side gives you all the stocks which are very much near to the resistance price. That is where the maximum put call writing is done for these stocks. So for example, Coforge, you can see if the price comes around 5700 levels, very likely the selling is bound to happen at this level. So there is again a 50-point range till the stock prices hit this resistance, and we can see there is a very significant call writing at 5700 levels. So in this way you can utilize, this is the maximum resistance zone. Again you can see all the stocks. So if the resistance PCR is very much near to 0, the higher the resistance is, and if you see fresh call writing happening at those levels, it means any bounce has been utilized to write more calls. So it means the selling is likely to come above this particular resistance. So if on the next trading day the price goes above 5700, this gives us a high probability trade, keeping a stop loss above the call option premium of the 5700, which you can look at the stocks analysis page and then utilize that opportunity. So friends, in this way you can utilize these two tables, stocks above support and stocks just below resistance, to take effective trades by keeping a strict stop loss. So friends, with this we come to the end of this video. Hope you liked this video. Please do provide your feedback about the analysis we have discussed in this video. It is very helpful for us to get your feedback. And if you have not subscribed to our channel, please subscribe to our channel so that you can get the notifications of such videos which we post every week, so that you can learn how to identify high probability trades using the derivative analysis. And friends, if you want to get the access of our dashboard, please visit our website www.stocksfactor.com. We have mentioned the details of all the subscription plans which we have released, as you can see here. See you in another video. Take care and goodbye.